Hello, it's Doc Severson for the ReadySetCrypto OMNIA newsletter market update for Thursday, the 7th of May. I'm cutting this about 6 hours before the end of the trading day, and we'll start to print new candles on cryptocurrency. So whatever I say now could change in the next 6 hours, but it's unlikely to. We're seeing a green across the board, and we're seeing the top two really drive the markets between Bitcoin and Ethereum, both extremely strong, very good technical patterns that we're seeing right now as well too. The other thing that I like, and this is what we've started to mention recently, is that on Bitcoin, notice how the volume has really picked up since we went through that crash down here. We had a fair amount of capitulation, I would say. That's the type of volume that I'm looking for something like that. And now we're starting to see, this is the big old F here. FOMO is kicking in. And we're also seeing volume on the buying, which is good. The other thing I'm seeing too is that this is more than just a quiet and trending rally to the upside. It is not pausing for very long. And this is what we see a lot of times with cryptocurrencies, that it doesn't care how exhausted it is. It doesn't care how overbought it is. It gets into these modes where it's, FOMO is just the name of the game. The issue right now is that we're seeing risk assets back in vogue, whereas they weren't. Obviously, they weren't back in February, March timeframe. This was a bad time for every risk asset. And now we're seeing risk assets coming along. And don't forget that there is no shortage in money right now. There is no problem with liquidity, and there's no shortage of money. So even though we're overall in a huge bear market for the rest of the, everything financial is in a bear market right now, but money is not. And money's looking for a home, and money's looking for yield. And so I think there's a sense right now, and we're starting to see this, and maybe people are starting to catch on to this whole notion of the halving, which they were as of a week or two ago, they were not, right? So we're just sitting down there in the market. I kept talking about how the market was not pricing in a halving. Now we were starting to see that. We were starting to see the realized and implied volatilities perk up a little bit. Still not to the degree that I would expect to see, but this is a very, very good sign, seeing volume and price going side by side. Now, notice also that we've broken out above this important trend line. I've got the volume profile up here. We can see that we can now treat the 8,000 level as support, whereas it was resistance before. So that's good. That's an anchor that we can lean on. And it's also gotten above the next high volume node at 8,800. The next one is up here right at 10,000. The price is flirting with that price right now. I don't talk much about Ethereum, as it's really been a nasty pattern. You can see this on the weekly chart. Ethereum has just been in really an awful pattern, much worse than Bitcoin has been. And this is just another weekly swing to the upside so far. But man, has this got an enormous amount of potential. Now, if we look at this on a log chart, we can see that perhaps this is just a big, maybe even a monthly consolidation. Let's see if we can even do a monthly chart on this. Yeah, kind of looks like a bull flag on a monthly basis. And perhaps what that is exactly what this is. So we may have much more in store for Ethereum going forward, but again, we can't trade off of that monthly chart. So we're just looking at this from a price perspective. And I love this type of pattern here. I love to see price crawling up an ascending trend line, consolidating, and then breaking out. So we can see a bit more of this structure if we put on the RSI Laguerre, and we can see that how the price goes up to exhaustion right there, pulls back into a bull flag pattern, bounces off of that trend line, or nearabouts there at about 200. Former resistance, now new support at 200. This is all really good. And now we have a lot of energy, which is explaining today's break to the upside. This one should be heading towards 300 before long. The real rock star today, and again, I don't know what the news is behind this, but volume speaks, volumes here in 0x. So I don't know what the reason for this is. would not chase after this one at this point. I would wait for a consolidation to show up and then perhaps a break above, in this case, above 28 cents would be the next entry for this after it breaks, because right now, never chase after these things. I don't care how bad the FOMO is. You always wait for the pullback. And I just want to sign off here with a sort of a salute to say, well, you just hate to see this, don't you? Liquidated shorts. This is one of the reasons why the market is driving higher, because of all the liquidated shorts. Got to buy it back to close down the position, and that's at liquidation, which always occurs at a market price. That is not the way to manage risk on your account, but too little, too late for most of these guys. You hate to see it, but there you go. This is why you've got to have both sides of a market. You can't run a market without shorts in it, because if you want a market to explode higher, you got to get these guys to wreck out. And that's what's happening today. That is it for today's report. Thanks for listening, folks. We'll see you over this weekend. You guys have a great Friday.